welcome back to another episode of Ron's Crypto Therapy. Sorry I wasn't able to make a video in over a week. I was just busy. I really wanted to make a video leading into this week because based off of our last video, the most likely scenario we talked about is what played out. So if anyone remembers from the last video, we talked about, is this a bull flag falling wedge? And the main thing with a wedge, you want to see 3 pushes down. And I think we were somewhere, around here on the last video. So the question was, all right, was this 1 and 2 and 3, or is this 1, 2, and then that we get a leg up, a small leg up within the wedge, and then the third push down? I said that I thought was the most likely scenario, and that is what played out, because there's a lot of confluence pointing to this area here around, somewhere around 25K. For one, you have this trend line, those trend lines like that have a few touches, they tend to be somewhat of a magnet for price. You have the 200-day moving average that hadn't been touched in a while, and you had this gap here that had not been close to be filled. So when I talk about gaps, I'm talking about when there's a place to the left, these wicks over here, and to that point you had this where there was no gap fill, and you could expect on that wedge that the bears would try to fill that gap. So there's quite a few reasons pointing toward that area, as well as on heat maps. There's a lot of liquidity at that area. I'm gonna start using some heat maps. I know they're kind of popular nowadays. If anyone doesn't know how to read a heat map, so this area of yellow, that's like high liquidity, at least on this design of a heat map. So price does tend to move to where that liquidity is. And as you can see, this down move, we had this strong pull liquidity here that got taken out, and then it came down here and grabbed all of this, and this was probably the main one right here that you'd seen for a while, and that got. Now you didn't get some of this down here, but that's kind of common. Sometimes you have a big pull down there, and it doesn't go quite all the way down to get that. So if you look at where we're at now, the closest area of a concentrated pool of liquidity is up here, and I wouldn't advise anyone to trade like that off of a heat map and just go towards where the concentration of liquidity is. I would say just use it as a tool, just like any other indicator, and that's how I use it. I use it as a tool. I was aware that there was a large amount of liquidity at that area of around mid 25K with all this other confluence, and that just added up perfectly that you could still have this falling wedge that goes and grabs that liquidity, hits these areas, all those kinds of things. And, I still think that the overall move is up, and I still believe that. And let's look at some of the things that we saw here now. So I talk about gaps a lot in all these videos. So look at where these wicks are and where that wick came down to. And this could change slightly by exchange, but that did not even quite get filled. Also, it did not quite touch the 200-day moving average, and it did not touch this trend line. And it wicked up, and what that means to me is eager buyers, that anybody that was going off any of these indicators, that they put their orders above because they were eager to buy. Simple as that. And then we talk about this head and shoulders on the weekly. If we take it, call this the neckline. It depends on how you want to draw this, but just say we use here as the neckline. And that breakout takes us to about 40K, I do believe. Yep, 39. It depends how you draw the trend line. You had a little bit of trouble there drawing it. So it's about 40K. Now, I'm not saying that is going to play out, but I am saying that Bitcoin bulls are trying to make that play out. Like, that is what they are going for. Like I say, generally, the higher the time frame, the bigger the money. And this is an inverse head and shoulders. And look at that breakout they got out of that head and shoulders. I mean, that's textbook what you want to see, a clear break below. And then this coming down, you can look at it as trying to fill that gap or a retest of that neckline. So, that's something I would definitely keep in mind. And also, volume is something that I look at as well. And this is, I'm looking at Kraken as an exchange. Whenever you look at volume, you want to look at a big exchange. I believe Kraken's top 5, so it's a pretty big exchange. And you want to see, like, if the price is going up or going down, you want to see the volume rising. Doesn't matter if it's going up or down. So here, say from this bottom here, you could pick any of these candles. Let's say this wick this candle here, we had a low. You get rising volume all the way up here, and that's good. And then you start to get falling volume, see, from here to here, and price went up. So that's a divergence. And what happened? The price went down. But we haven't got that much of a push, and the prices went down, and volume has went down. That's red flag. If price is going down, you want volume should go up. Think of volume as like the fuel for the market. So there's a few red flags with the volume as I've been watching this move as well. We want to go look at the daily. We talked about this head and shoulders. A lot of people talking about this head and shoulders, and it was going down because of this head and shoulders. But don't forget, the bigger head and shoulders is on the weekly. And so say we say we get that to play out, and the move didn't even go there. And it can be a little subjective on where you draw these lines and things like that. But so far the measured move from the head and shoulders didn't go there, but we did get a dump down, and just to the areas we talked about. So you've had it come down close to the 200-day moving average. Now, could this head and shoulders still play out and we get another push down? Absolutely, that could definitely happen, and we could get a true touch of this trend line. Yesterday's candle was very bullish. You get a outside bar engulfing. That is bullish. But this is trading range price action. I mean, if you look all throughout in here, it looks like a big trading range. Bull bar, bear bar, two bulls, one bear, back and forth. So it's really more a trading range price action. And that's what you get in trading range price action. Big up, big down. I even put on Twitter yesterday, I said this is a bullish candle. I wouldn't necessarily exit the longs. I did take profit at the 50-day moving average. I'll talk about that in a second. But I expected that today we would probably have a down day, but not down to these lows again. We could, and we're going to look in a smaller time frame and look at this a little more on what I was looking at. I had a pretty good idea it was going down. The main time frame that I like to look at on a daily basis is the hourly, and if you see this, I have this 50-day moving average up here, and it's not something that I've always kept on the chart, but if you look back while Bitcoin's been ranging this area, it has absolutely been respecting this 50-day moving average for sure. So what I was seeing, well, if we just go back a little bit to where the up move here, we had this fake out above the 50-day moving average. So you got some decent bear bars there. Could you have went short there? Yes, you could have, but I would not. I would never go short after something like that. I mean, that's a decent bear candle. You got somewhat of a pin bar candle up here, some reversal, but normally you're going to at least get a double top, and you get that lower high double top here. So after that engulfing candle here, that would have been an okay place to go short. After you break the moving average on a decent bear candle closing on its low, that would have been a pretty good place to go short. And then you're looking at, like, here's how you kind of determine who's winning the range. Where are the stronger candles coming from? So at this point, you're getting a series of bear bars. All right, a little bit of range, some more bear bars, weak pullback. I mean, look at this pullback. Bull bar, bear bar, small bear bar, small bull bars, small bear bar, back and forth. There's like not much momentum for the bulls. And when you get, like, you want to see this kind of move at the bottom, not at the top. So once you had that reversal right there, that would have been a good place. But then when you get the breakdown here, this is like definitely telling you. So you're getting a big candle breaking and closing below the 50-day moving average, which we know has been respected. So from there, I've talked about lots of times, I go in to use this other strategy using the 20 EMA once I feel like the market is trending or starting to go one direction. So I go into a smaller time frame. And I have this arrow drawn to this wick here, and I haven't actually looked at the 15-minute here. I just spotted this out and I was looking at the video because I bet that that's going to touch moving average on a lower time frame, and it would have been a place to take a trade. So if we go to the 15-minute, and sure enough, where we put that arrow at, it came up to the 20 EMA on the 15-minute. And so right here below this candle, that would have been a place to go short. You could have set that as a 2-to-1, the stop up here, and you would have hit that successfully. Here was another place. You get it price going above the moving average, and then a pretty nice strong bear bar below. That's not my favorite setup like that. I prefer it to kind of touch the moving average and then get a bear bar and then go in that direction. But you can do this too. And if you would have set that as a 2-to-1, entry below, stop above, 2-to-1, I'm quite sure that would have been hit. Now this candle here, no, I don't like going short below that. It's a big candle later in the trend. Like we've already got a big candle here. I mean, it could have kept going below after that, but I didn't like that at that time. And see, we go to another time frame. See the 30-minute. You could have taken it off that too. That was really the true one. That's how I like to see it more. A wick off the EMA, then you set the order below the candle, so you only get filled if it continues to go in that direction. Stop above the candle or above the EMA, and you would have hit a nice 2-to-1 easily there. So let me do that so we can't see what would have been up ahead. So as price is going through here, you see we're not even making it to the 50-day moving average. You know, every time we get close, it's price turns around, and it's rangy action, and you know we got kind of tight ranges, not really much going on, so price is kind of resetting itself a little bit, and then we get this wick off the 50-day moving average quick, and we're back on the 15-minute now, so that means it got rejected quick. And let's look at this on the hourly. Yep. So reject it off the 50-day, and then that engulfing candle, big body, you know, the biggest candle in a little while. So going short below that would have definitely been a good move. Now you might say, well, we still got this structure here and this here. Like, I don't know, like I don't want to double bottom or whatever. And that was a legit concern. After this candle here, then that's another good sign right there. But you're still not closing below this. You know, at what point would you go? You know, at some point you just have to make a decision, and if you think it's going short, go short. And if you look in the 15-minute, you can take, you know, other entries. Didn't get to the moving average, you know, at that bear bar there, that would have been a good place to do it. So anyway, the only reason I'm going over this is like 4 or 5 or 6 places going all the way back over here where you could have went short at. And then we see what happens there. And I believe if we go to this on the 15-minute, you can even get, okay, so where it touched the EMA on the hourly, and then if you went into the 15 and you saw that close, this is where it would have closed. This would have been like another good chance. Go in under that bar, or maybe below this structure here, set an order here, so that way if price goes that direction, your order gets filled and you go with the move. So there was so many places to go short here and get in on this move, and it was pretty good. You know, it was pretty good. And my focus was really more buying BTC around 25K is what I was looking for, and I've been waiting for that for a little while. So which I did, and I even posted screenshots on Twitter. I bought it 25.6 and 25.7, I believe it was. And I think that we'll probably get some more continuation up, as we talked about earlier. Just to recap a little bit, you know, we wicked off above the 200-day, above the trend line, above these wicks over here. Depending on how this closes on the weekly, bulls would definitely like to get this up more. Definitely don't want it to come back down below its midpoint, but if they could close this candle green especially, that would be a big win for them. It actually reminds me a little bit of this candle here, even just a little bit. Another asset I wanted to look at is IMX, and I'm going to do a separate video on OMI at another time. And with IMX, I'm going to keep it real simple here. I mean, this is on the weekly. You know, maybe we could say on the weekly we're in something like this broad bear channel, something like that. And we've got a pretty good down move, especially if you look at the daily, starting here after this nice up move. And, big candle to start. Maybe this will be the big candle that finishes it. What I'd like to see, and if you want the IMX to go up, is maybe off this mid channel line, somewhere around there to start. Maybe we can get some reversal. Start looking for some reversal patterns and hopefully go up. The good thing about a bear channel is it's a 75% chance at some point it'll break out to the upside. So hopefully that's what we will get, if you want to see it go up. Now, honestly, I've been trading IMX and doing pretty well, and I haven't even really been looking at higher time frames. And I'll tell you guys exactly what I've been doing. I've been doing things like this as I've been trading it, where I'm just trading this range, to be quite honest with you. And I did this with OMI when I traded OMI a lot, and I did it very successfully for a while. So I'll draw something like that, and I'll set buy orders or sell orders here and buy orders here, and I'll just let it bounce back and forth as price ranges, and gather more IMX. When I do that, I'm trying to build a bag of an asset like I did with OMI or IMX. I do it with some small cap stuff too. And maybe this doesn't look like too much of a move, doesn't look too sexy. Well, every time it's bouncing back and forth, it's like 8.5%. So if I hit that several times in a week, and this is the 4 hour, so on some of these, even if I went to the hourly, there may even be more opportunities. So just leaving limit orders. That's how you. So if I'm going with a move, I'm always talking about putting the order like above the candle or below the candle, because I'm going with the move, and I use a stop order. So the order gets triggered only if price goes that way. Now, in these kind of conditions, when you're trading a ranging market, you use limit orders. Just set limit orders at these places where you see that it's ranging, and go from there. Now, after it's all the way here, it's easy to say, oh, I could have put them here, could have put them there, or whatever. And that's where you have to look left and find these levels and what is going to work. And then as it starts to build some structure, once about here, then you should have an idea of where you want to set everything. So yeah, and that's how I've been trading IMX. And I know that's really simple and not complicated, but sometimes Al Brooks, he said that Forrest Gump would make a better trader than Albert Einstein. Sometimes just keeping it simple is the best thing to do, and trading a flat trading range like that, that's it's pretty easy. So anyway, yep, that's pretty much how I see Bitcoin now. Just looking at the 4 hour, so you had this nice wick double bottom there. That's one of the favorite patterns I like to see. In both cases, it didn't make it to the 200 day. So I was buying spot down here, but then I think it was even on the hourly. Once that's when I went long on leverage. It was like a double. This is exactly what you want to see. To me, this was more of a sell climax, and then you get the double bottom engulfing candle. And that's what you want to see. When you look at some of these candles, if you know how to read charts and you can kind of like merge time frames in your head, like this move right here, if you combine all those together from the open of this bear candle here, this is what the candle would look like if you combined all that. Then a little wick on the top, but still more of like a pin par hammer type candle. So anyway, I hope everybody got something out of that, and I appreciate everybody who tuned in and watched the video to the end, and I'm gonna put out an OMI video either later today or tomorrow. All right, later everyone.